The crisis is over. Things are looking up again. That's what the European Union Commission is telling us for months. So are the big problems really over? Or will the Ukraine crisis and the strong euro become an obstacle for the recovery? That's what I'm talking about with Deutsche Bank Research expert Oliver Rakau. Mr. Rakau, first of all, let's have a look on the DBIX. Please tell us, how has the world economy developed in April?
The DBIX actually went up in April. That's mostly due to the improvement in the United States as well as in Europe or in Germany. In the United States, we have a recovery after the very weak winter-driven first quarter. And in Germany, we have a generally domestically driven upswing. Whereas in China, in Japan, the things look stable but not exciting on the growth side.
So is it very optimistic of the European Union Commission to say the European economy will grow by 1.2% this year?
That's actually pretty much our forecast as well. We have, I think, 1.1%, so about the same. That's not optimistic. I think that's a baseline. Most participants on the markets see about the same growth rate. Problematic is still how far the divergence is inside of Europe. We have Germany with much stronger growth, and we have the peripheral countries that still struggle with the restructuring of their economies.
The Ukraine crisis seems to be a big risk for the recovery. What do you think? How much could it affect the European economy?
That's really difficult to say because you simply do not know how things will play out. We are currently still thinking that things are not going to escalate much further. And if that's the case, then the effects for the overall economy shouldn't be too large, given the fact that Europe is not that dependent on the export side on Russia and Ukraine. But if things should escalate, you could approximate that by looking at the Russian crisis in the late 90s. At that time, GDP went down by 10% there, and that approximately translates to 0.5 percentage points lower growth in Germany. That would still mean about 1% growth in Germany. So from that perspective, as long as things don't escalate too much further, the European economy should be fine.
Many European countries are complaining about the very high euro exchange rate. What can be done about that? Is it really important to do anything right now, in fact?
That's a big question. Generally speaking, exchange rates develop on markets and you cannot really do that much. Of course, central banks have an effect on that, but you also have a lot of capital inflows into the European Monetary Union, and these have been strong, supporting the euro. But that should stop at some point, which would again be less of an impetus for the exchange rate. Also, you have a strengthening US economy, which should strengthen the dollar versus the euro. So all in all speaking, there shouldn't be done that much because things are likely to change anyway. But currently, a lot of market participants expect the ECB to do something in June at least.
We will talk about this later on. Thank you so far, Mr. Rakau. Yes, well, strong euro, weak economy. You can watch the full interview on dw.de/English/Made in Germany.